Okay, maybe you live in the western suburbs of Chicago or you're looking to make a move here. In today's video, I'm going to give you a market update so you know exactly what's going on, because the headlines are so misleading right now and you might not know what's going on in your backyard if you just read those headlines. As a reminder, I'm Mike Thornton. I have a top real estate team here in the western suburbs of Chicago. I'd love to be a resource for you if you want to know more about this area. Our information is in the description below, but let's jump right in. All right, so I've read so many headlines how the market has completely shifted to buyers, and that is the case in some areas of the country. Areas like Florida, Texas, they are saturated with inventory right now, but that's not the case everywhere. It's actually very much the opposite in the Midwest and many parts of the Northeast right now. And so where I'm at in the western suburbs of Chicago is much different than the storyline, so I want to give you that information today. Quick story though, to kind of illustrate the differences, is we were just down in Florida with our family in the Panhandle, the 30A area, which is just beautiful. And I saw for sale sign after for sale sign, and I called a realtor friend down there, and he said there was 1,000 homes for sale along 30A, Santa Rosa Beach. And that is equating to about 15 months of inventory. So if there were no new homes hitting the market, it would take 15 months for that inventory to turn over, which is an extreme buyer's market. And the reason being is you have lots of new construction down there. You have lots of second homes, vacation homes. Those properties are the first properties to get listed if there's any sort of changes in situations. There's not a lot of primary residents down there compared to other areas of the country. And so you're seeing tons of inventory. And so what that means is on the pro side, if you're a buyer down there, you have tons to choose from. You have very motivated sellers, and you're gonna no doubt get an offer accepted. However, the downside is that market is not at all stabilized, and you're probably in a position where that could go down even more in price before it stabilizes. Now the flip side is here in Chicagoland, which is what I want to focus on. You have currently 1 month of supply in the marketplace. That is an extreme seller's market. So if there's 100 homes for sale, it only takes 1 month for 100 homes to turn over. That has been the case for years and years at this point. We have a supply problem here. There's very little new construction. There's household formations that are exceeding that, and you're seeing very constrained supply. The opposite of Florida, very few vacation homes here, very few second homes here. There's a little bit of rentals taking up some inventory, but the rest is primary residence, and you're a little bit landlocked with where we're at. So I read a report by Realtor.com that it suggests that the Midwest, it would take 41 years to close that supply gap based on new construction versus household formations. That's not great. So you're in a position here where the downside of trying to buy a house in this market is it's very, very competitive. It's tough to get an offer accepted, but if you do, you're in a position where that home's probably gonna be worth more in 6 months or even a year. And that, historically speaking, was you're lucky to break even if you held the house for 2 or 3 years. That's not the case. You've had 5 years in a row of appreciation between 8 and 12%. Not sustainable, but people have these exit strategies very quickly because they're building enough equity to cover any sort of expenses when selling after just 9 to 12 months. So the appreciation currently in the market in DuPage County right now, rolling 3 months, is 4.3%. So if I was to go rolling 12 months, you would see this gradual up and to the right trend. I'm going and wanting to see a little bit tighter time frame to see the recent trends in the market. And what's even more interesting is when you see the peaks and valleys within this chart, you can see how pricing's really peaking in the midsummer and then it's dropping back down again. And you really have to back up 30 to 60 days to know when that demand was highest, because there's that escrow period between when it goes under contract and then when it closes. So what this is telling me is the most competitive time to buy in our area is really April, May, and June. That's leading to highest prices in June, July, and August. So this is the most competitive time. And even just anecdotally on the street, we're sensing that. We've had a lot of runner-ups lately where buyers are writing crazy good offers and they're losing out. And that is exactly what we saw last year. So it was very tight early in the spring. And then after some of those really crazy buyers came off the board because they got the houses that they wanted, it normalized just a little bit. And some of those buyers that were still writing great offers but losing were able to find a place in May, June, July, later on in the spring, early summer. I anticipate this year being no different, that being the same dynamic. So what's leading to that? I mentioned it, it's very low supply. We're at 1 month of inventory, and believe it or not, that's up 11%. Irregardless, whether you're at 0.7 or 1.5, there's no inventory in the marketplace, and there's not a great story to be told on how that's going to change anytime soon. The reason I say that is interest rates normally can impact supply a little bit, but back in 2022 in July, they doubled interest rates basically overnight. It had no impact on supply whatsoever, at least the relation between supply and demand. That actually created a little bit of a lock-in effect where people didn't want to sell into that market. So they're gonna have to take something drastic to change what's going on here, because even when you're at 4 or 5 months of inventory in a neutral market, you're still appreciating at about 2 or 3%. So you'd have to really jack up this inventory to 4 or 5x to have home prices go down. When I look at percentage of original list price achieved, this is a cool metric because it's comparing what sellers are asking to what they're actually getting. There's also a really cool trend that you can see here where, again, it speaks to average trading price. Is it's most sellers are actually getting more than what they're asking, 101% in that summer period. Then it kind of drops back down to 98%. So no matter what, it's very competitive. Sellers are achieving most of what they're asking. However, it is peaking in the summertime. So if you're in this market, be encouraged because it's crazy right now, but once you get into the summer, attention is divided somewhat. You can have some opportunities as a buyer to get in after some of these wild buyers come off the board in the early spring. It does loosen up a little bit. There's divided attention and you have opportunities in the spring, or in the summer. If you want to buy in the fall, winter, inventory is more limited, but it's much less competitive and you'll have better chances of getting something done. And the biggest encouragement is, even though it feels tough to get into a property, they are appreciating at such a quick clip that you're probably gonna be adding quite a bit of wealth to your asset column if you get into a house and just ride the time in market. It's less about timing the market, more about time in the market. Hope that's helpful. Again, let us be a resource for you if you're looking to move to the western suburbs, or if you live here, want to talk real estate, reach out to us. Until next time, have a great day.